Ladies and gentlemen, good day and welcome to the earnings call of Purple United Sales Limited for the financial year ended 31st March 2025. The floor will be open for questions once the management's presentation concludes. Please note, today's call is being recorded and may include forward-looking statements based on current expectations. These involve risks and uncertainties that could cause actual results to differ materially. The company is not obligated to update such statements except as required by law. Listeners are advised not to place undue reliance on them. Representing Purple United today, we have Mr. J.D. Seth, Managing Director, Mrs. Bhavna Seth, Directors Operation and Sales, Mr. Naresh Kumar, Chief Financial Officer. Without further delay, I now invite Mr. J.D. Seth to share a brief overview of the company's performance and provide insights into our operations.
Uh,
Thank you and over to you, sir.
Thank you very much. Good afternoon, everyone. On behalf of Purple United, I welcome you all for this earning call for the financial year 24-25. And those of those who are new, I'll just give a brief introduction about the company. Purple United Sales Limited is into kids fashion, kids premium fashion, and we are focusing on a premium fashion as a category, primarily targeting apparels, footwear, and accessories, and with age group ranging from 0 to 14 years. Shop happiness is the mantra that we try to promote through our brand. And may I request Mrs. Seth to just quickly take us through our vision and mission statement of the company.
Good evening, everyone. With the very first thought about kids, we all think of happiness, love, and emotions today, and a bright and responsible future tomorrow. This journey starts from a newborn to their teens and then so on. Every day and on every occasion, their mood and needs keep changing.
Next slide, please.
Always looking for their wardrobe solutions. This is where we come as a one-stop solution with our vision to be the most admired premium fashion brand for kids. At Purple, we believe that even every child is unique and special, defining our mission to enable them to express themselves using our brand as a medium.
So, as we all know, we got listed in December 2024. These are some key facts and figures about our performance, and some other operational parameters. We touched a 52-week high of 276. Interestingly, today also we have reached a new high of 281, and the 52-week low was 120, with a market cap of roughly 255 CR. As at 31st March 2025, we from last year numbers of 14 stores, we reached 43 exclusive retail outlets, and I can just mention that last week we opened our 50th outlet also. And we are proud of our team and that we have been able to achieve this milestone in a shorter span of time. We operate a 30,000 square feet warehouse, which is based out of Delhi, and it primarily caters to our warehousing needs of all our channels. We have 20 plus offline distribution, regional and key accounts SIS partners. We are as at 31st March, we were at 9 plus states. Currently, we are operating in 12 states with more than 30 plus cities. We have 650 styles for kids fashion as a category, and our team is aggressively growing. And currently, we are having a 250 plus strong employee strength. Can you please move to the next slide, please? So this depicts our journey for the last 10 years. Purple was incorporated in 2014, and kids business we actually started somewhere in 2017 with license arrangement with brands with characters like Disney, Barbie, etc. And subsequently, we launched our brand on e-commerce space, and we started our association with Amazon, Flipkart, etc. 1st December 2019, that was the day when we opened our first retail store by the name of Purple United Kids. And subsequently, after we saw the wave of COVID, we expanded into other regions of Delhi NCR and subsequently in Punjab. as I mentioned earlier, in we had 14 retail stores in the last financial year, and this number reached 43 as at 31st March 2025. And now we have, in this journey, we got listed in December 2024. And next slide, please. And I'm thankful to all the investors who have shown confidence in us, and our IPO was subscribed almost 160 times, and against an offer size of 17.32 lakh shares, we were able to generate an interest of approximately 27 CR. And on the listing day, the price was the opening price was 199, and it hit the upper circuit of 208 on the very first day. This is our listing ceremony that we participated in at Mumbai in December 2024. The next slide, please. So coming to the growth of prospects and opportunity, and kids business is approximately 1,80,000 CR industry, and it's growing at a decent CAGR of roughly 6%. So there is and the 50% of the market is in the unorganized segment. So there is a potential to grow for an organized player, and subsequently there is a very large untapped there are very large untapped market or locations in tier 1 and tier 2 cities. So there is a huge opportunity to grow in these tier cities also. Plus, all the cities are expanding. So there are new growing cities. Just to give you an example, cities like Mohali, Noida is expanding to Greater Noida. Similarly for Gurgaon, if I talk of the North India. Subsequently, now these new cities are having a high-rise culture where we have our target audience, the young population, with a decent income of 2 to 2.5 lakhs per month. And there are structured or high structured malls, and we are able to generate very good responses for the new cities that are coming up in our country. So we are targeting the new growing cities besides tier 1 and tier 2 cities. That is the growth prospect that we see for future. So being in the premium fashion brand, so there's an ability to raise awareness about the kids fashion. We have did a lot of experimental, and we have been successful also. If you happen to visit some of our new stores, so we have created experience centers like special segments for kids, highlighting the denim as a category, and some other categories accordingly. So the kind of ambience that we have created is totally goes with our premium fashion as our mantra. And if you happen to get an opportunity to visit our store, I request please do visit our store to get the real experience of our retail operations and ambience. So also there is an opportunity to leverage technology for our future growth. Towards this, I can say that we have already implemented a CRM and CLP programs, and to capitalize on the funneling aspect of the database that we are getting from our retail and other channels. And we hope to use these data based on the relevant technologies to fuel our future growth. There is an opportunity to add additional products of categories or subcategories. Just now I mentioned about that we have created a specialized denim section. Now we plan to create focus on subcategories like canvas shoes. Besides increasing the contribution of the categories that we are still in the testing stage. For example, we tested toys in some of our stores and got a pretty decent response. And subsequently, for our larger stores, now we are targeting new categories like cord stroller. But obviously, we keep in mind of our motto of being in the premium fashion as a category. So we assure that whatever we do, it falls under the umbrella of premium fashion as a whole. Next slide, please. So these are some of the recognition that we received during our journey. One of the awards that is a Shiro's Award given to us, and we also received a Time Power Icon Award recently, and some of the publications that have appeared in various newspapers. And the links are there. You're welcome to go into the further details of all those publications. And next slide, please. This is our corporate office at Noida, and we are really expanding. And hopefully, next time when we'll meet, we'll be having a bigger office to accommodate our growing business needs. Next slide, please. This is our warehouse. We are a 30,000 square feet warehouse, which is based out of West Delhi, West Delhi. Mundka is the exact place. This warehouse has all the capabilities of a modern warehouse, on whether it's a pallet tracking or the warehouse management system. And the prior experience that we have gained over the years, we are trying to utilize those kind of experience in all these operational efficiencies. Next slide, please. So Purpose United Kits have some sub-brands also. Toothless by Purpose United into footwear. And besides our retail and offline partners, it is available online also. THS is into the party wear segment. That's a style or that's a style. Currently, this category we're doing in our retail, and there is a specific party wear wall that is dedicated to these categories. Next slide, please. So we are an omni-channel company, and driven by seasoned professionals in all the functional and support functions categories. And besides retail, our own retail store, we are doing e-commerce business with all the major e-commerce platforms. And we are actively involved with our distribution channels of distributors, shop and shop, and large format stores. Next slide, please. So some of our image product that are available across various channels. Next, please. We are at Mantra. So we are at Mantra, Amazon, FirstCry, Flipkart, AJIO, and images of our product on their respective platforms. Next slide, please. So as at 31st March, we were having 43 stores, and this chart shows about how the stores are structured. Primarily, we are following a cluster approach, and this helps us for our customers to connect within the city or within the state. And many stores are in the project stage, and that will be operational in the future months. And currently, we are covering, as at 31st March, we were covering 9 states, and currently we are at 12 states. And hopefully, we'll be expanding our footprint in other parts of our country. So we opened store at Sarat City Mall also, and Phoenix Citadel Mall also. In Delhi, Rohini, we opened a flagship store. It's a high street store. So we are following a mix of high street and mall, and the selection of the store depends upon the future potential of the area, current footfalls that is available in the vicinity, our target audience, which are connected with kids or the women's store. So a couple of parameters we take into account while selecting a particular store location. Next slide, please. So our retail presence in a few of our stores. Left is Indore. Then we have experimented some of the stores in B cities also, and the response have been pretty decent. And we have expanded. We have opened store at Bareilly also, even a town like Rewa also, and we are really getting a very good response, and hopefully that will be expanding in these cities further. Next slide, please. So broadly, we have two product categories. One is the apparel and second is the footwear. overall, the current contribution is 64% comes from the apparels, and 33% come from the footwear and accessory, and 3% is the hard good. Hard good is a relatively new category that we introduced for our larger store, because particularly in malls, it's very difficult to get a larger store. But in high street, where we have a 1,000 square feet plus store size, we are selling these categories on our retail store also. Next slide, please. So, ma'am, you can take this slide, please.
Yes, primarily we talk of fashion. So fashion captures more of attention of apparels and footwear as a major category. We talk of all segment where we try to do the justification with all the size groups as well, talking of starting from infants and toddlers and older as a category as well. And yes, the kind of a balancing required in the journey for a child, like if I talk of a boys as a different category and girls as a different category, they all are with the kind of balanced approach with Purple United. That is what we think as a execution as well, to give each and every segment a specific space and area to define the required needs to be justified. Right, sir.
So we are in the asset light model, and we do design and preparing the tech packs and sending it to our various factories for preparing the samples, and subsequently the open costing is being executed, and inline QC and final QC is done. So
there goes a huge research before going ahead with the workmanship for the all the mood boards and the style boards. We go ahead with all the research, international trends to be studied, what colors to be studied, and the major part for kids as a category is we need to be very specific about the functionality of the product. So before going ahead with any kind of boards to be finalized, we take all these points in consideration, and then we go ahead with the designing of the boards and then finalization. Once the boards are all finalized, we go ahead with all the details to be taken care of for the factories to produce, and whosoever signature matches with the product mix, we go ahead with the sampling first and then costing and then going ahead with the production part. Right, sir.
So we have a professional team from NIFT, FDDI, institutes like NIFT and FDDI, who are specialized in their product category. So they design it, and then they do the sample development and then coordinate with the various factories to get the product source. Next slide, please. So coming to the key strategies, and I'm a small admirer of omni-channel business, but having said that, what have been my learning that focus should be on the control business, and the control business comes from the retail and to some extent e-commerce. So we are following that strategy, that we are strengthening ourselves in retail, and it indirectly helps us to build other channels also. That is an omni-channel strategy that we are currently following. And so well, we believe in the product diversification. So we provide a wide range of trendy and fashionable products for kids and their parents, and to fulfill our motto of the premium fashion as a category, and that have been our brand positioning, that we want to be focused on the premium fashion as a category, and that's currently we are trying to capitalize through our retail ambience that we are just I mentioned about the special section that we have created for denim. We are now introducing a specialized canvas shoes as a category. So all these experiments we are doing to position ourselves as a premium fashion as a category. So we'll be expanding ourselves across India, but obviously we'll be following a cluster approach, that at least the city, the state we are targeting, at least we have decent number of stores, so that we can have a better customer connect and a decent repeat customer rate, because in kids the repeat customer rate is very important, and currently we're researching somewhere around 27 to 28% of the repeat customers in our retail stores. And with growing businesses increases the complexities also, And so for that to have the operational efficiency, we are taking support of you can see the technologies and upgrading our IT system and other relevant aspects of our business operations. Next slide, please. So I briefly mentioned about the industry overview earlier also. That Netcade's apparel market is roughly 1,84,000 CR, and it is growing a CAGR of roughly 7%. And the 50% of the market is in the unorganized space. So that gives a room for an organized player to come and capture a good pie of this industry. So that's why on the lighter side, sometimes we say that kidding business is not a small business. It's not a kidding business. It's a very big business. Next slide, please. So these are our team members. Besides both of us, we have the relevant department heads. For example, Sumati is current General Manager Marketing. She was earlier working with Paytm. Faisal is a part of the footwear specialist. He takes care of footwear sourcing, and he was earlier with Bata. The apparel specialist position is in the hiring stage. Mohsin was earlier working with First Cry and also worked with W, and he takes care of the retail operations. And Ria is a part of BD, and she was earlier working with the Vivani Group and also worked with the Kish Fashion brand. Ankur is the distribution head for our footwear business. Vaibhav is our e-com head. He comes with 10 plus years of experience with various fashion and cosmetics brand, and he's strengthening our e-commerce business. Pawan is a part of our supply chain. He's heading our warehouse. Naresh is here only. He's our CFO and plus chartered accountant. Prior to joining us, he was working with a subsidiary of Flipkart. IT is a CS plus compliance officer. Vivek and Manisha are part of advisory team. Manisha is my real mother. They are also running a tech company by the name of Innovation M, and they help us in our various technology needs. And Vivek is a former investment banker. He's a part of strategic team. He's running a coffee startup business in Saudi and Dubai. Next slide, please. Coming to the financials. This financial year, we did a revenue of roughly 103 CR with EBITDA of 20% and a PAT margin of roughly 10%. So we can come to these numbers later on once we have Q&A session. Next slide, please. And these are our balance sheet numbers. And you can go to the next slide. We can come to these numbers. So last slide, please. So yeah, as far as the revenue from operations is concerned, there is an increase of 138%, and primarily because of there are 2-3 reasons because of this increase. Number one, second half of our business is it contributes almost 65% of the first half, primarily because of the winter season, which is a need-based buying. Secondly, all the festivals are primarily in the second half of the financial year, whether it's the Shara, Diwali, New Year, Christmas, or regional festivals. So that is, and plus we were able to expand because of the support that we received through our IPO and investors, and we were able to capitalize for our retail expansion besides other functional area. Similarly, there is an increase of the EBITDA also of 115%, and PAT has increased for the old financial, it has increased by 148%, and for the half year financial 25, it has increased by 118%. Reserves are now 5x, and total asset base has also increased by 167% because of expansion in retail and investment in capex, etc. So this is a brief about the financial numbers, and I hope. Thanks for your time and patience. Now we can have a Q&A session. Over to you, please.
Thank you, sir. We'll now begin the question and answer session. Participants who wish to ask a question may raise their hand. We'll take the first question from Mr. Vipul.
Good afternoon, Mr. Vipul. Please. I think he's on mute.
We'll take the next question from Mr. Ankit.
Hello, am I audible?
Yeah, you're audible, Sandeep.
Hello.
Yeah,
Hello.
good evening, sir, and congratulations for the wonderful set of numbers.
Thank you very
My
much.
question was based on the. I had two questions, sir. Number one was that can you please give some information, if possible, on like the breakup of the revenue through different channels like online, EBO, and distributors? Because in the RHP, when the IPO came out, sir, the share of distributors was higher, and the number of EBOs at that time was 13. But today we are at 43 EBOs. So I'm assuming that in this year the share of EBO based revenue has gone up. So just wanted some information on that. And the second thing, sir, on I had was a bookkeeping question. That on the if we look at the receivables and the inventory, then the receivables are about 60 CR. So is it because we are still doing a lot of push through online channels and distributors where there is a credit period involved? Because I believe that in the EVO stores we don't have a credit period. So
Yeah.
these were my two questions, sir.
Okay. Coming to your first question, yes, you are absolutely right that once our contribution for retail stores has to increase, but most of the stores were opened in the last quarter. So the impact of these control business will actually come in the current financial year. So currently, if I tell you about the mix, that approximately 20. Hello.
Yes, sir.
So if I what was mentioned in the RHP, more or less currently the ratios are in the similar measure, but in the current financial year, because the EBOs have increased, the share of the control business, what we are envisaging, will reach somewhere around 45%. That is where we are hoping. So around 48% business still coming from the distributors and the SIS and large format stores. Having said that, so that's why you see the larger receivable, because in this period of February and March, because of new season launch, the inventories are built up. The stock is built up because we have to plan for the forward sale for the next 4-5 months. So all the customers are built with the new inventories. So that's why you see the higher receivable as at 31st March, because this is the period for the launch of new season. Irony is that we have to report for March and September. These 2 months are there where there is a change of season, and we have to build inventory for the new season. Having said that, yes, what we are envisaging that in this financial year, 45% approximately business should come from retail, and around 18 to 20% will come from e-commerce, and the overall percentage contribution of the offline business, which is receivable dependent, will come down in percentage term. And one more thing, yes, we are aware that the data is on the higher side, and we are aggressively working on that, and we are hoping that at least 50% of these data will be realized by June. And I do not have the current exact number for this month, because in the last 2-3 months we have the heavy collection from these channels. So we are hopeful that this approximately 50% data will be realized by June. So we are actually we are working on these lines also to have a better credit control. So and once we come from a stage of emerging brand to a brand in making, we also and our more dependency on our control business, where there are no data, we can also have our stringent policies for these kind of channels also. So, I hope I have answered your queries.
We'll take the next question from Mr. Vipul.
Hopefully now you're able to hear me.
Yeah, we are able to hear you.
So, so first of all, congratulations, sir,
Thank
for
you very
such a
much.
great numbers. It's being there is a significant increase which has happened, and it's being your first half yearly numbers. Very delighted to see these kind of number coming up. I have a couple of questions, sir. In continuation to a previous participant's question, I was looking at trend in the online business which you entered quite a long time back. I mean, it's been like 4 5 years even before opening your own outlet. You online channels you started, still the number of value of online business, if I look at, and the growth I look at, it is not in line with the what you would see in distribution. Any reason? Because when I see the other larger brands like First Cry and all, their 60 70% of business comes from online.
Yeah, agreed. Um, See, First Cry, if you have referred to First Cry, so I can only say that they are primarily the aggregators. Besides their private label, they are selling the other. It is basically a marketplace. So that is a different model altogether. So coming to us, if we talk of 5 6 years down the line, how the e-commerce was doing, primarily these players, whether it's Amazon, Flipkart, Mantra, Ajio, they used to buy the quantities in bulk. They used to do the B2B business, and they in turn used to sell the products. So but subsequently, when certain government guidelines came that they should not have the controlled inventory business should be restricted to 25 30%. So after those guidelines, the business moved to the marketplaces. So marketplaces have their own plus and minuses also. Because if you promote certain products, obviously competition is there, and these brands even launch their own private labels also in the same vicinity. So strategically, what we did in retail for the last year, that we aggressively focused on retail and opened did our retail expansion. This year, besides retail expansion, our focus is entirely on our e-commerce business besides retail. Now, how we are going to structure it? Number one, we are revamping our D2C platform. Certain technological changes, as I mentioned, that we are now focusing on technological aspects also. We are revamping our website also completely, and hired a very aggressive team also, and with all the ancillary function of whether it's marketing, whether it's SEO or performance marketing, or the influencer marketing also. Just before the call, I received a message from my marketing team that we were doing some influencer activities through some influencers. Our in Instagram page had 20 lakh view on that particular ad. So these kind of activities we are currently doing, and um, um, so we are going step by step. So we tested our retail business, we established the SOPs, we established the process. Now we have to repeat that playbook for expansion of our retail store in a place. Similarly, now it is going to happen for our retail. Oh, sorry, for our e-commerce business also. I can assure you that you will see the results in the coming month, that how we have transferred our e-commerce business also. So
Understood. This
so
helps, sir.
so strategically we are hitting one thing. We are focusing one thing at a time. Last year we focused on retail. That doesn't mean retail will not happen. Retail is now in more or less in an auto mode. You can say, or not exactly auto mode, but SOPs are clear now. We know what to sell. We know how to plan the inventory. We understand how we have to operationally manage the day-to-day operations, how to drive retail operations, how to drive sales. So those things are more or less stabilized. Now the focus is on the e-commerce business. So that's
Und-
somewhat I can say, that the you'll see numbers will skip will speak when we discuss it after 6 7 months.
Understood, sir. Even I, when you say, because even I, when I saw your app and website as well, it the even the variety of products, and I believe versus what is there on your retail stores, what is there on online, there was a significant difference, and it looked like
Exactly.
that there is a revamp required, which you just said. I think that will be taken care once the
Absolutely,
revamp
absolutely. The
happens.
focus was on retail, and now things you'll see the improvement in 2-3 months because I have already instructed my team to upgrade the website. Currently, we're in Magento. We are shifting to Shopify, and some back-end work is currently going on.
Understood. Sir, now I wanted to understand your store economics. When I say store economics, just say when we open a store, typically how much investment does a
So,
store require? And then how much time typically takes for a store to break even? And, and kind of how much is once it break evens, then it is like of its own, or you still need to pump in money for working capital? How does it work?
okay, sure. So, if I first of all, how much investment is required in a store? I take an example of 1,000 square feet store. No, normally, 3,000 to 3,500 is the per square feet capex cost. Uh, Approximately 35 lakhs is the capex cost that goes into the store because our store is slightly on the premium side. Then we have a security deposit that we have to give to the landlord or the mall developer depending on the location. Again, it varies from 6 to 10 lakhs depending on the location, because malls normally take 6 months of deposit, and individual flats are sometimes 3 months or 4 months. And approximately 20 to 25 lakhs goes into the inventory or the working capital. So this is the economics. You can say approximately 60 to 65 lakhs is the investment required in a particular store to make it a store operation. Now, coming to the break-even level of that store, first of all, once we decide to open a store, so a lot of input goes into that, the kind of walk-in that we'll be able to generate, particularly specifically what kind of footfall are there for, particularly for the parents or women, because women are normally our buyer, actual consumers are kids. And so similar stores in the vicinity, what is the data, what has been the trend in that market, or it is or sometimes we also decide based on some upcoming or new market. So based on that, the location is right. So normally, going by our experience, and because our team is experienced enough to um, uh, understand that what kind of average sale will be generating and what is the future of that particular store. So it normally takes 3 to 6 months for store to come to a break-even level. But having said it, if we start a store before the winter, let's say if we start a store in September, October, normally the store is viable by the time we reaches by the winter concludes. Main reason being that in winter the ASPs are high. There is a need-based buying because of winter. T-shirt is for 799, but sweatshirt is for 1899. Similarly, shorts is for 800. Denims are 2,000 plus. Jackets are 3,000 plus. So in winter, the ASPs are high. Accordingly, the store becomes profitable in the winter itself. And in 6 months, we are able to generate a decent customer database. Our repeat customer, and we can have a repeat customer also. And from summer, the focus shifted on a UPT, how to increase the unit per transaction. Because somebody will not buy one t-shirt or one short. So how to increase that 2, 3 t-shirts, or cross-selling with some accessories or some footwear and some bottom wear. So the focus shifted in summer for the how to increase the UPT of the particular customer. So just to conclude that normally I can say on the safer side, it takes 6 months for a store to break even. Asking your last question of working capital, increase in working capital. Normally, the peak working capital requirements are in the winter, and the summer, obviously, the merchandise is less. So, working capital requirements 70 to 75% lesser on the lesser side vis-a-vis during the winter season because of the difference in the merchandise. But normally, there is no fresh working capital required, plus minus 10% in the increase in the pricing or the cost of sourcing. That is the only thing. And this, what I have initial investment in the working capital, more or less is sufficient to run the store in the long run. Yes, any retail store requires certain kind of repair and maintenance, maybe periodically, maybe some fresh whitewash, etc. So there's a small capex that we have to incur while running a store.
Got it. So you're saying what initially whatever money you put in as part of your initial capital, broadly that is the one required, and then it is not that you have to keep putting more money on a after 6 months. It's not like that. Then it is of its own. The cycle runs, and then that
Yeah,
individual
but
store after 6 months will be able to generate net cash flows. Correct? I mean
yeah,
that will be
but
able to give you cash flows after 6 months, right?
yeah, definitely. But having said that, because in our seasonal business, we have to build inventory for the forward cover for the next 4 months. So obviously there is a back end inventory that we have to keep for supporting the store. So that I have not included in this 2025. That is the store inventory I'm taking. See.
Got it. So practically सर जैसे ही आपका अभी जो डिस्ट्रीब्यूशन बिजनेस कम होकर रिटेल बढ़ जाएगा, तो आपकी अभी जो डेट लेवल्स हैं, जो वर्किंग कैपिटल है, बहुत ज्यादा रिक्वायर्ड है, दैट विल शुड गो डाउन, राइट? आई एम
Uh,
अज्यूमिंग टोटल डेट में सर व्हाट इज द पोर्शन ऑफ वर्किंग कैपिटल, व्हाट इज योर लॉन्ग टर्म डेट? इट्स आई
so
थिंक 10.
roughly 25 CR is our CC limits. That is
Okay,
a
out of
short term, and out of and the 15 CR is some for the basically term loans for our capex work that we have taken earlier.
got it, got it, got it. So sir, अभी जैसे हमने expansion किया है, like we have now 50 stores approximately. So next, like by this year end, what do we target? And say by next another year, what is broadly, what are targets we have? And as we have suddenly opened like from 14 to 50, what has been the response? Because we have gone to new markets also like Hyderabad and all. How has been our response in there?
As I mentioned, every city there has been a learning, and if I talk of numbers, those are very much aligned with what were our expectations, and broadly most of the stores where there are high footfall areas, there are no concern. They are already EBITDA positive. Those stores are EBITDA positive. Some couple of 2-3 stores that are relatively new. We are assuming that in another 2-3 months they will also will be EBITDA positive. So a cluster approach have really helped us in attracting gaining our customer base across various stores. For example, Punjab, now we have decent strength of approximately 20 plus stores in that region. So now customers knows us. Indirectly opening stores in all the cities indirectly helps in the marketing also and the brand recognition also. So cluster approach is really helping us. And I gave you an example. Last week I was in Bhopal. So some of the walking customer that came in, yes, okay. Now Purple is also in Bhopal because the customer was from Indore. So there's a customer connectivity that is happening, and this will indirectly help us in brand building and generating a decent repeat customer. Because in retail, the database is important, customer database is important. What kind of repeat customer you're getting is very important. So currently we have around our retail database around 1.75 lakhs is the database that we have. So hopefully we are able to increase the database to around 3.5 to 4 lakhs by this financial year. And that will really help us in obviously using technology to drive our future numbers. That will be the key to our pushing our sales, whether it's through the e-commerce or through our offline stores. That database is going to be very critical in future.
So I was asking, sir,
You
what right now we have like 50 stores.
Yes, sir.
By year end, what is the target we are looking at for current
Okay.
year?
Sir,
And maybe for next year, what is the estimated store opening, or what is our plan for, like, say, current year as well in next 1 or 2 years?
Sir, I really don't know whether I can give any forward-looking statement or not, but I can only say that the market is very big, and there's a potential to grow the. Just to give you a small comparison, we are at 50. First Sky is at 1500. So the gap is very huge. The market is wide open for a premium fashion as a category. Market is wide open, sir. So potential is very huge, and maybe we declare some store numbers in future in our stock exchange statement. Then you'll definitely get an idea. But the potential is very large. There's a huge gap in the market.
Thank
Got it, sir. So
you.
Thank you.
one
Sir.
last point,
Sure.
one last point, just one last point, sir. Sir, why I was asking for the stores was, see, we've done IPO now, and we've more than doubled our stores, which is like 50 plus now. So with the current kind of funds and working capital which we have, till what stores we can go, or we are now
Okay.
planning to
Okay. I
mature
got you.
them, we are trying to
So,
generate accruals and just go with the growth through that accruals.
So we did some rough calculation internally. As per those calculation, with the current internal accruals, will be easily we can easily open around 20-25 more stores. That's not a concern. 20-25 more stores. Obviously, if we because we're in the we are aggressively opening a store, and if we have to go beyond that, and we have not deliberated or debated on this aspect that for opening more stores, what kind of route we'll take, well, whether we'll take the debt or equity, that we still have to deliberate internally. And it's quite obvious that beyond 20-25 stores, we may require fresh infusion of funds, and that is a strategy call. Once we decide internally, we can take it either through a debt or equity or a mix of both. Maybe
Or sir, even internal accruals, because eventually your stores will start generating cash, right?
yeah.
After 6 months to a year, your
Mhm.
stores will start generating cash, and capital required for individual stores is not very high. Eventually, then your internal
So
accruals will also
yeah,
help, right?
that's why I mentioned maybe we'll be easily able to open 20-25 stores from our internal accruals. That doesn't seem to be a problem. So, but beyond that, if we have to increase our pace, that we may have to look out for
Understood.
alternate
Got it.
options.
Got
Yes.
it, sir. Thank you so much,
Thank
and
you. Thank
all
you,
the
Mr.
best,
Lama.
sir. Keep rocking. Thank you.
Thank you, Mr. Lama. Thanks for it. Bye bye.
Thank you, sir. We'll take the next question from Mr. AB.
Hello, am I audible?
Yeah, you are audible, sir.
Hello. Yeah. So just wanted to ask, like, are we predominantly targeting tier one cities or tier two cities?
Good question. Uh, Initially, we were focusing on tier one cities, but what was happening that tier one cities are primarily matured markets. Okay. So, what was the problem we were facing? That we were not getting properties in good high streets or good malls, or the pricing was very high for a kids brand. For example, if I talk of Mall of India, we are in the waiting list and we are waiting for the 6 to 8 months. Phoenix Indore also we got after 6 months. Sarah City also we got after 8 months of waiting. So somehow we were not able to expand at the pace that we wanted to envisage. So we slightly twisted our strategy that why not to target B or B plus market? Just
Sir,
I
some
mentioned about
issues
the
with your
Indore
voice, please.
B plus town. Um, uh, and then we also experimented in cities like Bareilly. It's a B city. Now, what is happening? Uh, uh, all these cities, all these cities are having their own Connaught Place or a Brigade Road or what you call Colaba, etc. So we identify Connaught Place in these cities, and we opened our decent sized stores, and the response has been tremendous. And comparatively, the rentals are relatively on the lesser sides. And these cities, particularly if I talk of a state like UP, it's a very big population, and the retail was very much restricted. So we are getting very decent response. So, in summary, just to summarize your question with my answer, that focus will always remain on tier one, but we cannot ignore tier two because these tier two cities are also expanding, and they have decent per capita income and consumption, and they are also looking for better options for their family or for their kids.
Okay. And sir, for our old stores, what is the SSSG, same store sales growth?
So it is around 24 to 25%. Those who have decent 8 to 9 months of operation in the last year. Sorry, 12 months of operation vis-a-vis the last year. So approximately we have registered a growth of 24 to 25%.
How much do you think next year also we can, at this base, we can maintain this much SSSG next year also?
See, let me be very honest, 10 to 12% automatically goes because of the increase in pricing. And we can easily envisage another 14 to 15% because, as I just mentioned, because our customer base is growing and focus on the repeat customer, focus on the some certain technology aspect of running a CRM or a customer loyalty programs, and now focusing on localized influencer activities also for our retail stores. So we do not see any problem that it will be less than 25%. We can take it 25 plus.
Okay, so we can maintain around 25, you're telling. Okay. And what is our average ticket size?
See, again, it is season specific. If approximately 800, 900, it happens in the summer, and 1800, 1900, sorry, I'm talking about the ASP of a product. The ticket size is around, this was the ASP of a product because in winter the ASP increases, and the ticket size, approximately we get a UPT of roughly 2.3 to 2.5. So in summer, the ticket size is around 2000 to 2200. And in winter, it goes somewhere around 3,000 to 3,500.
Okay. And sir, we are predominantly we are looking to grow in company-owned, company-operated stores, or we are looking for franchises?
Okay. Out of 50 stores, 5 are franchisee currently. And thanks to the IPO, we are getting pretty decent inquiries about being in the franchisee model also. So we are open to that also. And the prime reason has been that India is a very vast country, and sometimes we get decent properties owned by the landlords who want to be the franchise, who want to be the franchisee also. So there's a mix and match model we'll be following, and all premium location it will be company owned, company operated, and we can look out for the franchisee model also where decent properties are available. Yes, to have a better control, we provide our own POS, point of sale terminal, and normally we try to place our store manager so that we can follow all the relevant store operations SOPs and better coordination with the backend team. So that is the strategy we follow, even to give a similar kind of experience to our customer, even if he or she walks into our franchisee store.
Do we have a revenue sharing model with these franchisee partners?
Yeah, it's revenue sharing. Sometimes, if I talk of on the lease side also, sometimes we get from the malls or high street properties also, high street malls also. That with franchisee, yes, it is a margin deal, and normally we give them a margin, and the rental, the OPEX, it comes under their scope.
Okay. And our products, we have our own manufacturing, or it is contract manufacturing?
So going by my prior experience of working, associating with all these big names like Nike, Puma, etc. Nobody owns a factory. In fact, what I have seen, because I was associated with these brands, we launched these brands like Nike and Puma in our region when they came to our country. They all work on the asset light model. We also working on the similar model. We have the entire team of designer, product development managers, sourcing, quality control, and we are the asset light model. We design it, we give it to the various factories. They provide the samples, and we get it manufactured from these factories. And having said it, even if we put in our factory, we can do 1 or 2 product categories because the subcategories are very wide. First main category is the footwear and apparel, then there's a separate set of subcategories in that. So one factory cannot do everything. So we have to rely on multiple factories to get our sourcing needs. And yes, but we give our designs, we advise them to what kind of fabrics they have to, what kind of materials they have to use. all the products are lab tested. Being in the premium kids fashion space, we ensure that we achieve that all those quality parameters, and accordingly we do the inline QC and the post production QC, and the product then come to our warehouse for dispatch to our various channels.
Okay. And what is our inventory days as of now, and what percentage of our sales is on discount, was sold on discount?
Okay. So normally, first of all, coming to the inventory, normally the inventory, as I mentioned earlier, we have to build inventory for the forward 4-5 month sale. And February, March is the season where there's a season launch. So inventory in books in those periods will be on the relatively higher side. But normally we take an inventory cover of 3 to 3.5 months. That is the norm normally we follow. And plus the second question, sorry, please you can repeat it. What was the second
percentage of sales on discount?
Okay, so thanks to e-commerce, now every brand has to strategize as per the they have to strategize for the discounting that they have to give during the various parts of the year. So what we have seen that whenever the inventory, whenever you can divide the whole thing into 3-4 parts. There is a fresh sale, then there is a you can say some event-based sale, then there are end of season sale. Normally during the fresh sale, the merchandise is sold at full MRP or with some some UPT scheme, a unit per transaction, maybe buy 3 get some discount or something like that. And the event dates, for example, if we have some festivities, etc., then there are certain discounts or some freebies are given, and there are end of season sale. So these are the 3. So discounting varies depending on season. But what I have seen that normally on an average, if we take the entire 6 months of a business cycle, the discount is in the range of 30 to 35%. Having said that, MRPs are decided keeping in mind these kind of discounting that we'll be giving over the period of the, and accordingly gross margins are decided.
Okay. So just wanted to have your idea, like how much, what kind of revenue do we think we can achieve next year?
So again, I'm not authorized to give any forward-looking statement, but I can only say that the market is very big. The potential is very, very, very huge. So I can only say that you can. We have delivered recently also, and hopefully we are aligned with whatever targets and plans we have. We have in-house plan, and there is a tremendous potential. I can only summarize in this manner.
Okay, sir. And one last question, sir. So going forward, we will be focusing more on our EBO business, or we will be focusing more on the online sales?
So as I earlier said, all the channels are important. We cannot ignore any channel, whether it's online or whether it's retail. Having said that, because nowadays the things are with the help of technology, things are even interconnected also. Maybe in future we may drive our e-commerce business through our retail stores also, so that nowadays we keep on listing about the quick commerce, etc. So maybe in future we'll be using our store as our DC for dispatching to our customers in that vicinity. So all the channels are important. Lead might be generated in e-commerce, but the actual conversion may happen at the weekend at the physical store, and it may happen in the reverse side also. But the lead may be generated at the physical store, and conversion happens in the online. So we have to technologically we have to maintain that kind of connectivity between all the channels, and in the current context, in the current scenario, we cannot ignore any channel. All the channels are important, and might be it is for the lead generation, but the conversion may happen in any other. So I am a strong believer of both the channels. So obviously, because the kind of for promoting the D2C business, you require heavy investment in marketing. But what we understand, once we have a decent size of retail, this will indirectly will help in our boosting our e-commerce business also. So both the channels are important. So that is the philosophy we'll be having in future also.
And sir, one last if I question
Sure.
if I can ask. Sir, what is our gross margins? Can you give?
See, in the current books, approximately is 50%. But as I said, the retail is relatively new, aging from 1 day to 3 months, most of the stores. So we envisage that approximately will be able to, in future, will be able to take the retail gross margin to somewhere around 57 to 58%. And the other channel will be somewhere between 50 to 54%, you can say.
Thank you, sir. Thank you, sir.
Thank
You
you.
answered all my questions. Thank you, sir.
Thank you.
We'll take the next question from Mr. Prabal.
Hello, am I audible?
Yeah, you are audible. Yeah, Mr. Chan.
Yeah, yes. So congratulations, sir. Good,
Thank you.
good numbers.
Thank you very
Sir,
much.
first, my first question is around our future plans. So I understand you don't want to give any particular guidance, but I just want to understand the trajectory, like how are we looking at FY26 and ahead. So you said that you can put up 20-25 stores organically through your internal funds and those things. But so I just want to understand what are your future plans? Are you going to focus more on retail channel, or you'll be focusing more on your B2B channels? Or you'll be focusing more on e-commerce, like where you will be like focusing on, and
Sir,
also on around your hiring plans and fundraise, if you can help us, like anything which you have set internal targets for yourself for FY26 and ahead, like in terms of expansion or addition of product lines or anything.
So coming to your question of the focus, which channel will be on focus? Obviously, retail will be our first priority because, again, going by my learning of over the years, one should focus on the control business because that gives an insight of your connectivity with the customer directly. You're able to get the direct feedback from your customers, and accordingly, you can structure your offerings accordingly for retail. So, as I just mentioned, in the current scenario, we cannot ignore other channels also. Yes, we'll be active on e-commerce also, but we'll be restricting our marketing spend, and we'll be focusing on retail business to generate some kind of organic traffic for our e-commerce platform also. And distribution, obviously, how the things are shaping up. And that's what happened, that once you are strong in retail and retail particularly, now there's a demand generation that happens to the distribution or the SIs or the key accounts also. And obviously we cannot completely ignore that channel. But yes, with the acceptability of our products in these channels also, we can always have a better control of our with our business partner and all. So all the channels are important, but the priority wise, if you ask me, the retail will be the first priority. Second is the e-commerce, and then the other channels also.
Okay. Sir, one more follow-up on this part, because I think the last time we met, you said that by FY26 end, every month you can add 2-3 stores. And you had a target, I think, internal target of 100 stores by FY26 end. And right now, I think we have 44. So, and you are saying 2025 you can add more.
Currently, we have 50, sir. So,
50. Okay, great. So any timelines for this 20-25 stores further that you're planning to add?
So many stores are in the project stage. I can only say that, and I've signed many properties. So, and you can see the many stores are in the project stage that we are hoping that they will be operational shortly. So, with our 70-75 stores, maybe we'll be able to touch those numbers in another 2 to 3 months.
Okay, sir. Great. Okay, sir. Thanks. Yeah,
Thank you.
that's it. Yes.
Thank you. We'll take the next question from Mr. Ankur.
Hi sir, I wanted to know, like a matured store, what kind of monthly sales or yearly sales a matured store does?
Normally, we measure it through per square feet sale. In a kids brand, normally 900 to 1,000 square feet is the you can say it's a decent sale you can sell. If we have in a men's store, we'd have in 1,400 or 1,500. But for kids, approximately 900 square feet you can take. So 1,000 square feet will be doing roughly 9 lakhs per month.
So we can say that if a store is doing 1 CR revenue per annum, it is a matured store, right?
You can say that for 1,000 square feet. For kids, you can say that. And
Okay.
for kids, it's a second say.
And sir, you on average, what is the operational cost per month to run that store?
There are broadly two major costs. One is the rental, and second is the staff salary and other business expenses. So normally, if you say around 15, if we take a 10 lakh store, approximately 15 to 18% is the rental cost out of the occupancy cost. Another 15 to 18% is the other operational cost. So that is normally you can say around 35 to 40% is the operational cost that direct operational cost for running a store.
So sir, as you said that your margins, gross margins are like 55, 57%. So we can safely assume that, you are at least getting 20, 25% net NPM, net profit margin
Uh,
on your sales
uh,
in store.
So yes, on the store level, the you can say yeah, roughly the EBITDA is around 20-21% that we generate from our stores.
And sir, out of these 57 stores, how many stores will you say are not yet matured, and how many are matured as per you?
So if you want, we can separately share this data. Approximately, if we talk about 31st March 2025, there were 43 stores. And since most of the stores were having an aging of 1 day to 3 months, so it's very early to comment. But yes, for all the like-to-like stores, as just mentioned, there's a growth of 25%. So maybe for the new stores, we'll be able to throw some light after at least it has a 6 months of running period for that particular store. But for the mature store, we achieved a growth of 25% on the like-to-like basis.
Understood, sir. Sir, one last thing, sir.
Sure.
Uh, when you open a new store, let's say you opened a new store this month. Like you said, to get to reach a matured revenue of 9 to 10 lakh rupees month per month, how much time does it take? How many months does it take?
See, this is an average figure. Sometimes the store will be having a 750 or 800 as a revenue, and sometimes the good store will be having a 1100, 1200 as a revenue. But normally, as I mentioned earlier also, if we open a store in winter, so it becomes profitable in another 3 to 6 months. And by that 3 to 6 months, we are able to have a decent customer database, and we can capitalize on those repeat customers and new customer for our summer business also. So broadly, you can take 6 months. Normally, is a time to store to break even, another 3 to 6 months to stay to store to reach to the optimum level.
Got it, sir. Sir, one last thing, sir. Going forward in this financial year, how do you see your, revenues break up? Like, what would come from EBOs and how much would come from LFS or online channels?
Okay.
Like on
So
average, like, what's your
so
feeling? Yeah.
so my feeling is that 45% should come from the retail, our own channel. Another 18 to 20% will be from the this e-commerce, and the rest will be from the distribution and other SIS and large format stores.
And sir, in distribution, large format stores, like what kind of margin do you get? I think it will be lesser. And what is the rotation period for your money in that?
So for distribution, yeah, it is on the higher side because normally The terms are for 45 to 60 days, but we realize somewhere between 3 to 4 months. And for large format stores, there are certain operational parameters also, because 25 to 30 days is practically the supply chain time, because once we invoice the goods, it take at least 20-25 days to reach to their DCs and then GRN at their end, and reaching the point of sale. And normally they release payment once they receive the GRN and the goods are available at their retail store. So this 25 to 30 days is the you can say the lag time that happens in the for large format store. Again, their payment terms are like 2 to 2.5 months, and so approximately on average you can take 3 months from the invoice date, and for distribution it's around 3 to 4 months.
Got it. Thank you so much, sir.
Thank you, sir. Thank you.
We'll take the next question from Shubham Gupta.
Hello, sir. Am I audible?
Yeah, you are Shishwam.
Sir, first of all, very good results.
Thank you, sir.
And I have been tracking your company on Instagram. Like you post regular updates of store openings there. So
Sure.
congratulations on that and keep doing that. Sir, I have what are your plans for the store openings in South India?
We have started our footprint in South India. We are already at Sarat City, and team is aggressive looking for alternate properties, as you mentioned, and we'll be having a cluster approach. Maybe we'll have a we'll be having more stores in Hyderabad, and then we'll be going to other cities like Bangalore, etc. So maybe another 3 to 6 months we can have more stores, but still the properties we have not identified, still in the identifying stage. And we have plans, but we are waiting for the right property, because in retail we have to be very selective as far as the selection of property is concerned, because that is very critical. And the positioning and the location of the property, it is very important. And accordingly, we keep on getting the properties, but we have rejected some of the properties also. And once the relevant properties are as per our SOPs, we'll definitely expand in those regions also.
Okay, sir. And sir, one more request. Can you give your quarterly results if possible? Also monthly sales data if possible.
I'll discuss that, because that's a strategy and technical point, because I have been updated that we have to, as per the exchange guideline, we have to give our half-yearly results. If that is practical, we'll definitely provide that also.
Sure, sir. So, sir, some of the companies are already giving it.
Sure, definitely. A point taken.
Definitely possible. Yeah.
Thank you.
Thank you, sir.
Thank you.
We'll take the next question from Ashwini.
Hello.
Yeah. Good evening.
Many congratulations on the results.
Hello.
Yeah, can you hear me?
Sir, your voice is not properly audible.
Yeah, is it better now?
So it's not, the pitch is low. Please say your question. Maybe if not able to hear, then I'll request you to repeat it.
I just wanted to know that, our first announcement of the exchanges was regarding launch of new products like toys and accessories.
Mm-hmm.
So, what is our view on these additional products? Are they like just filler products, or do we have a specific focus on those? Like, how are we thinking about those things?
Okay, ma'am, you can answer that.
So, as we define our thought process to be a one-stop solution, these hard goods and toys as a category is definitely a value addition. Since fashion holds a major contribution, if I talk of apparels and footwear, that is the main focus what we are going to work on. But the kind of a complete experience and a go-to place, definitely these categories are also playing a major contribution. If we are talking of a kids shopping, the focus is we get all the solutions under one roof. Hard goods is important for us, but primarily we'll be focusing more on the fashion products.
Just to add, we have to we'll be focusing whatever comes under the premium fashion as a category. Yes, for the larger store, but for the store which are in mall, obviously we have to see the per square feet sale also. we cannot keep everything. So we have to pick and choose. Toys, you mentioned, we have created this section depending on the store size, whether it's small or big, that we are selling toys, and we are doing certain accessories also, whether they are sling bags or not. But for the hard goods or the stallers, for the larger store, those stores which are 1,200 square feet plus, we are keeping those categories also, but keeping the premium fashion as a motto in mind. And accordingly, VM is done, and all those aspects are addressed accordingly. So still exploring, because ultimately, once, as I mentioned, if we have a decent customer base, we have to focus on how we can increase our bill value. So obviously, it will happen either we increase the per square feet display area of our existing categories, or we introduce new categories also. So and it obviously it will be primarily driven through historic numbers, and accordingly a scope of a new category that needs to be introduced. That for example, that last week also we were discussing something also, that shall we introduce certain trolley bags as a category or not. So these things we keep on deliberating, and obviously in future also, if will maybe introducing a couple of additional categories also. I hope it answers your query.
We'll take the next question from Dheeraj.
Hello.
Yeah,
Good
good evening.
evening, and many congratulations, sir, for the spectacular results that you have
Thank
announced.
you, sir. Thank you very much.
Sir, so my first question would be that you had said that 45% of the revenue is coming from controlled space.
Will
So,
will be will be sir, will be.
yeah,
Currently is around 28 to 30, because all the stores are having aging of 1 to 3 months.
okay, so 28 to 30 from EBOs, right?
So yeah.
Yeah. And sir, you had mentioned that around 50% of the debtors will be realized by June. So around 30 CR of operational cash flow we are talking about here?
So the debtors will be realized, but obviously there will be fresh billing also.
Yeah, definitely.
Okay.
So, sir, yeah, according to this, we should be able to do a lot of stores from our internal financing till, like, I think 2025, you are taking very conservative target, but we should be able to do a lot of stores through internal financing only. And even after that, we have a lot of debt ceiling, like interest cost as a percentage of our revenue is pretty low. So I think internal financing and borrowing will be the main source of cash funds for the new stores this year, right?
So as I mentioned earlier also, we'll be able to do 2025 store for because we have yet to do the deliberation on what will be the roadmap for future expansion. And as I mentioned, that what I'm assuming, that it has to be can be a debt or equity, or a mix of debt or equity. So whatever best suits us, we'll take this advice of the experts in this, and then we'll move forward accordingly.
Okay, that's perfect, sir. That's all from my side, and all the best for the future.
Thank you. Thank you, Mr. Kasim. Thank you very much.
We'll take the next question from Mr. Satish. I think we have a few questions in the question and answer tab. I'll read it out for you, sir.
Sure,
And
I'll just open it.
so the first question is, are you also looking for FOCO model instead of COCO model for opening new stores?
Lot of brands are doing this, and we are deliberating on this also. Maybe it can act as a future source for expansion also. So maybe once we do the deliberation, that once we reach a conclusion internally, then we'll be able to answer this question.
Okay, next is, sir just wanted to understand what kind of challenges we are facing as of now.
Which question is this?
It is from Mr. Vishal Kumar.
Okay, one. Thanks, Vishal, for your wishes. And I think the biggest challenge, as far as what I foresee, that hiring a good team is very challenging, and we are trying to learn the art of hiring good people and even retaining them, and that is one. And from the I mentioned about the other aspect also in the mature cities, in the matured mall. We are waiting for at least 6 to 8 months to get the desired properties, because if we get the properties in these kind of malls, so obviously will be able to establish ourselves at a very faster pace. Ma'am, you would like to add something? Any challenge?
But to be precise, these challenges are always the opportunity to learn and grow more. I'll say for this for now. Rest all little operational things and every such things. Definitely, we are equipped to go ahead with the things. As a future prospect, yes, little trivial things always are going to be a part of it. Nothing major much to be taken care of on the thing that this is becoming more of a challenging aspect. There is no such challenge.
Okay. Next question is from.
Next, we'll take from Mr. Ankit Agarwal. The question is, one mature store generates 1 crore sales per year. If our 50 crores are mature, 50 stores are mature, then we will generate 50 crores per year. And we aim to achieve 45% revenue share from retail. So our full year revenue will be 100 crores, which we have already achieved.
So I'm slightly see what I mentioned about the current running store. So if we're achieving 50 CR from the existing store, so obviously there'll be new store also that will also contribute to the top line that year. Yes, for the store that were already operation the last financial year or the till date, you can roughly take approximately 50 CR as the revenue from those stores. Plus, there will be new stores, and those also will contribute to the top line. And overall, if I talk of FY26 revenue, yes, it will be higher than 45% of the total revenue that will be able to generate in 25-26. Coming to the next question of Mr. Lamba. Last year, there are hardly any bad debt, because in the last year balance sheet, we did a doubtful provision for doubtful debt of 62 lakhs. This year, it has been increased by only 10 lakhs, so approximately it is 72 lakhs. Normally, these distributors are also working with larger brands, so not much risk on that, and it's very much in control. So 72 lakhs out of a top line of this year, it's even less than 1%. So that is if you want in the percentage term. So current assets is primarily. Naresh, can you answer this question? Bifurcation of current assets of 37 CR.
Sure, sir, sure. Mainly it is inventory, his other current assets. Just a moment. Yes, sir. It is mainly our advances given for capex expenditure to our vendors and to some factories for procurement of our goods. And it also includes some advances to like other vendors, or we source some services from them. Next question.
Next question of Mr. Amy. How is our pricing different from First Cry? Sir, we are positioning in the premium segment. We are costlier than First Cry. Our pricing strategy is similar to that of a Benetton, US Polo, or Lensoli. That's what because we are focusing in the premium fashion as a category, and so our pricing is higher vis-a-vis First Cry. So the question from Mr. Jain, Pankaj Jain, do you have a target ROCE? See, normally we payback period that we take is around approximately 3 years, and with EBITDA margins of 20% for the retail store that we open. So next question from Mr. Ashwani Agarwal. I think Mr. Agarwal is asking for that the numbers are very conservative. I can only say that we'll try to achieve whatever we commit. And as I mentioned earlier also, there's a huge potential, and because of the recession, we are not authorized to give any forward-looking statement. And hopefully, we'll overshoot whatever we are committing. Asking the question of Mr. Ashish Singhal. See, when the business grows, the complexity of the business will also increase, and we may have to increase our spend on two aspects. One is the hiring the key persons, and second is the marketing. So in the shorter run, there might be some impact on net profit margin, but it can have a long-term positive impact. Mr. Gaurav Sachdeva asked about my entrepreneur journey. So prior to this venture, as a channel partner, I was associated with all the big names like Nike, Puma, Bata, Reebok, Adidas, Hush Puppies as a channel partner in various capacities. We are proud to say that we were one of the initial distributors who launched brands like Nike and Puma in our region when they started their operations in our country. So, starting our operation in our country, and subsequently there was we saw that there is a gap in the kids fashion as an industry, so that's how we ventured into kids fashion. So he's also was our business bootstrap. Yes, it was for internal accruals and through support from various banks and through friends and family, through family members rather, not friends. And subsequently, now we are in the public domain. Asking question of Mr. Ankit Agarwal. As I mentioned, the second half of our business is almost 65% of total year revenue. So accordingly, again, normally H2 is 65% of the revenue, and H1 is 35%. That is the normal trend that we have seen. So asking, I think the name is not a last question. What happened? Normally, when we design the product categories, your product range, there are three aspects of it. One is the core, second is the essential, and third one is the fashion or the seasonal. Normally, core and essential are at those price point. For those we can attract the entry-level customers. So in retail, it happens like that. We have to design our pricing strategy in such a way that we have a product categories for every 50 rupees or 100 rupees, and accordingly the entire range is decided. So there will be a mid-level price points also, and there will be a premium price point. See, asking this question of Mr. Ankur Agarwal, if I talk of the LFS as a business, we are in the process of we are in discussion with new you can say regional as well as the national level players, and normally for adding any new customer, it takes at least 6 to 8 months in the LFS formats also in the large format. So whatever discussions we are doing, it will mature in next year, that is SS 2026, and normally whenever we start any new regional or the all India level partner, initially they will start with a few point of sale, and based on the performance, the further additional stores are given. So that is also focus area. But having said that, the focus will obviously remain on the controlled business, and that is retail, and then subsequently focus will be on the e-commerce. That doesn't mean that will include the distribution of the large format channel, but those are also very important channels. Ma'am, you can say something about the design team. There's a question.
So currently there are around 12 to 14 people working on different categories as a specialist. So the workmanship is divided accordingly. The things like apparels is a different journey. So each and every category needs a specific mindset to go ahead with the designing. Footwear also holds a different thing. And for retail projects and every such thing, also the design team is required. So approximately in the current state, it is around 12 to 14 people in all.
So ASP, as I mentioned, normally average selling price in summer is around 800, 900, and in winters around 1600, 1700. That is the average selling price. Next question is from Mr. Porwal. Spending on marketing and technology. Ideally speaking, should be spending around 3 to 5%, but currently we are not in that bracket also, and we are in the process of finalizing our marketing strategy, and we have had meeting with a couple of agencies also at how to take the marketing initiative forward. We obviously we keep on doing certain smaller activities, like as one of you mentioned about the influencer activities happening at our retail stores, and some activities that we connect with the schools in our region, and some events like Kukuruku, etc. Those are kid-specific events that we keep on doing. Now, we are in the process of designing an entire roadmap for marketing, and amount I will not be able to specify or the percentage, but it will be aligned with our growing business needs. And coming to the technology addition for e-commerce business, we'll start with we have, as I mentioned, we invested in CRM, and now we'll be starting with migrating our website to Shopify, etc. It will not be a very huge expense initially, but as and when the need arises, then we may have to shift to the enterprise versions of all these technology that currently we'll be using in the beginning. And Shopify is a matured platform, so we have all those connectivities available with the various APIs or apps that are prevailing in the market. So initially, it will be restricted to very much restricted, and going forward, once we have a decent customer connect through our website, we'll be focusing more on the UI UX or customizing our themes also on the website. So that is again not much in the short term as far as the technology spent on e-commerce business is concerned.
Okay, we'll take the next question from Mr. Prabal.
Yeah, hi sir. Am I
Yes.
audible?
Yeah, you are audible, please.
Yes, sir. So, sir, actually, I was just checking the PPT. I think right now we don't have the split for retail revenue and non-retail. So basically, in non-retail, there is B2B and then there is
Yeah,
e-commerce. So if you can give just that split.
roughly 28 to 30 is for the retail, around 15% for e-commerce, and rest is LFS, SIS, and distribution. Approximately
Okay.
48, 40.
So 30.
Yeah,
Okay.
please.
So 30, 15, and 55, basically, right?
Roughly you can say. And if you want the split of that, so it will be around 18% for LFS, and the rest will be the distribution in the B2B channel.
Okay. So, sir, a very simple question here. Uh, so if I assume what is the total the end points that you have right now, this assumes all like your EBOs, SIS, LFS, and e-commerce is a different thing. Non-e-commerce, how many
Point of sale you want to say?
25?
So, if I include for any distributors, they may have around 100 to 150 point of sales. So, if I let's say on average, I assume 100 distributors for one distributors. So, if we have around let's say 15 distributors currently, so approximately 1500 those touch points, and a large format or SIS around approximately 500 600 points. So in and all, you can say around 2,000 plus point of sale we'll be having currently.
Okay, so just to understand this more properly, so the purple partners that you have mentioned in your PPT, they are your B2B partners, right?
So they are distributors, SIS, and large format stores, you can say.
Acha, acha. Okay. So all in all, you are saying you have total 2,000 of endpoints as of now.
So giving, for example, our customer Reliance Centro or V Retail, they have around 60, 70 point of sale. We do business with the Profit Shoe also. They also have around 70, 80 point of sale. So similarly, these are regional retailers or all India retailers. They have multiple points, just like Shopper Stop or Lifestyle, etc. They have multiple point of sale. And regional retailers for in our region like Churmund, etc., they have multiple point of sale. So if I talk of partners, will be having approximately 25 to 30 partners, and they have multiple point of sales in turn.
Okay. So, okay. Great, sir. Great. Okay, sir. Just one more thing, sir. I
Sure.
think I missed it last time also I asked.
No problem.
So 2025 stores you will be opening from internal accruals. So now most likely I can assume in FY26 we can get started with these stores, maybe on a phased wise rollout basis, right?
Sir, most of the stores are still in the project stage, so I can say that only.
Okay. And the recent stores that you have rolled out, maybe I can assume by H2 they'll be reaching sort of mature state where their ASP might touch 2,000 types, right?
In the next winter season, definitely they will be.
Definitely, right? Because 3 to 6 months is what you have mentioned for break even, right? Okay,
Yes.
great, sir. And just one, okay, no issues. I'll get in touch separately. Rest
No
all
problem.
is just minor
No.
thing. Okay, thanks.
Thanks for your time. Thank you very much.
Okay, we'll take the next question from Mr. Ankit.
Hello.
Yeah, Mr. Ankit.
Sir, one follow-up question, and if you can answer, sir, our H2 revenue is higher versus H1 because of winter and ASP being higher. So this year in H2 we did, sir, 70 CR, which is roughly I think 12 to 13 CR per month run rate. So I was just asking that, can you share like what is the monthly run rate as of now, and what do you expect in the winter season it to be?
Okay. So, Naresh, can you just guide this question?
Sure. Ankit, you can connect separately on this. We'll share the details.
Okay. And just one question, sir. Versus, is it fair to assume that the split of revenue between first half and second half will be like 40-60 ratio?
Normally it's 35 to 40, and normally it is you can say 60-40 on the safer side. Again, there are many factors. How the winter goes. If the winter is very good, so obviously the revenue increases in that part. In the second part also, depending on the Diwali also. If Diwali is early, or Diwali is late, so buying happens early and accordingly. So
Okay.
there are a lot of factors. In the party wear segment also, when are the main wedding seasons, etc., or certain kids events. So a lot of factors decide the exact split between the H1 and H2.
Okay, so just one suggestion,
Sure,
no question, just one suggestion, sir.
no problem.
Today morning I downloaded the app and I was wanting to buy something for my kid who is 6 years old. So on your app, there is no section for 6 to 7 year old. There is
Oh,
5 to 6, and then there is 7 to 8.
yeah.
And also, sir, one more thing, what my wife told me was that we were looking for a clothing set, and then we were looking for some shirts for our son. And she was opening the First Cry app, and just a feedback, it's not critical or anything like that, but I think the style in First Cry, we ended up buying from First Cry because the style was better. So I would just say that maybe if we can increase the range of products which is available on the app online, then
Okay.
it would be
Sure,
a
sure.
good thing, sir.
So point taken. I'll just add something. As I mentioned, that our website and app are in the revamping state, and one of our colleague also mentioned that the range that is currently available on retail is entirely different what is available on our website also, because website is currently in the revamping stage, and that's not the exact benchmark. Ankit, which city you are from?
I am from Delhi, sir.
You're from Delhi, so please visit our Rajouri store or Rohini store, and which part of Delhi you're from?
Sir, actually, I am from South Delhi, Saket side, so I would
Okay.
request please open some store this side because Rajouri and Rohini
So
is
yeah,
very far.
and definitely, we in Saket, we in the process of signing a property at Sona Road also, and as I mentioned about the matured mall, it's very difficult to get the space in the matured mall also. We are at Saritagar Shine Bagh, but do visit our GIP or the God City store. They are good
Yes,
store.
sir.
So our retail ranges and our 10% of retail range is only available on with e-commerce side, and as I mentioned, we're in the process of upgrading all those things, and certain operational matters were there. And maybe in maybe 2 months you'll see the different website and different app also. So
And one more point taken. Shortly, you'll be finding us near around your place, please.
Okay, ma'am. Thank you so much because there's a real need for kids store, I think, in general in this
Yes.
area because we don't have one.
So the
That gives
problem,
much more a confidence as a brand for us also.
I
That's
was
what
about to sign. I was about to sign a property at GK, but the rentals are relatively higher in these places, particularly in South Delhi. So we have
Yes, I
to
can.
somehow, because make a balance between the cost that we have to incur. Sometimes we open those kind of stores because there is a brand building activity also, but we have to see the
Yes,
P&L at the end.
because our brand is a premium fashion brand, sir, and I know you are concerned about, or it's a factor about the rental, but
So,
in
so
south of Delhi, being in south of Delhi, I think is still I think the store
definitely.
will do great. Yes, sir.
Definitely, I
yes,
understand
sure.
the point. We'll
Yes.
definitely you'll shortly see a store in those areas.
Thank you.
Thank you, Mr. Ankit. Thank
Thank you for a wonderful session. I would now like to invite Mr. JD Seth to share his closing remarks.
you. Thanks everyone. Thanks for the queries. It really helps us to strategize our thoughts and the steps we need to take for future business actions. And the session was really encouraging and exciting, and gave us a lot of insight in what about the what all you guys are thinking on our brand, and also supporting us in our venture. Thanks once again, and really appreciate your time and patience, and to listening to for listening us. Ma'am, you would like to add something?
Kind of a trust and confidence is definitely mounting high and gives much more motivation for us to also work more and grow more. Thank you so much, everyone.
Thanks once again. Thank you very much for your time and patience. And hopefully, next time when we'll meet, then we'll have some more interesting stories to share.
I
Thank
hope
you.
we were all able to answer all the queries for now. Thank you so much.
Thank you very much. Thank you.
Thank you, sir. Thank you, ma'am.
Thank
On
you.
behalf of Purple United Sales Limited, we sincerely thank you for your time and continued interest. We appreciate your participation on today's call. You may now disconnect. Have a great day.
Thank you very much. Thank you. Thanks for your time. Bye.